Today on Fear and Greed, Australia's unemployment rate falls back to 3.9%, pretty much wiping out any chance of an interest rate cut in coming months. The federal government will force social media giants to pay publishers hundreds of millions of dollars for content, and Elon Musk becomes the first person to be valued at over $400 billion US. Plus, Virgin Australia begins selling long-haul flights, putting a bit of competition into the market, and private equity money hits the NFL in the US. Welcome to Fear and Greed Daily Business News. For people who make their own decisions, it is Friday, the 13th of December 2024. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, the main story this morning, the unemployment rate has fallen to 3.9%. It's a bit of a shock result, really, and it adds heavily to the argument that the Reserve Bank should wait until the middle of next year before it starts cutting interest rates.
It is the lowest rate since March this year and comes after employment grew by 35,600 last month, according to the Australian Bureau of Statistics. The information behind the headline figure is even stronger. Full-time employment jumped by 52,600, while part-time employment fell by 17,000. Even the ABS said it was an unusual number, adding that there was an unusually large amount of people waiting to take up full-time jobs in October, which then fed into the November labour force figures. The local jobs market is resilient, to say the least. The number of unemployed people fell by 27,000, although the participation rate edged lower to 67% from 67.1%. Still, that's around historical highs. The annual rate of growth is about 2.3%. It means that the labour market is expanding at about the same pace as population growth. So all those people coming into the country are finding a job. Quite incredible.
Sean, talk to me about interest rates because, it seems like every couple of days there's a new piece of information that entirely changes the prediction of what's going to happen in terms of interest rate cuts. So what do we expect now?
Well, that is a fair point. We had unambiguously soft economic growth figures last week, and on Tuesday the Reserve Bank kind of watered down its language around rate movements in the future in the economy. Basically, they raised hopes of a rate cut maybe as early as February, but, four buts.
Triple butt, quad butt, go on.
Quad butt. Yesterday's figures support the central bank's view that the labour market is still tight and gives the central bank a reason not to cut interest rates. I like the idea that we're talking about a triple butt being tight, Michael. Let's not go there. Basically, when people have a job, they spend money. And that keeps pressure on prices. Certainly, financial markets reacted very quickly to the strong data, with bond markets reducing the chance of a rate cut in February next year. The local share market was higher on opening and then fell quite sharply after the 11:30am announcement to finish the day slightly lower. Bit of corporate news around. We'll talk about most of it later on, but perhaps I should worth a mention. Media, the country's biggest outdoor media group, said it will cut costs by $15 million in response to challenging market conditions.
So no rate cuts in Australia, then we can say that. But it looks like there is one on the way in the United States.
That followed a positive inflation reading 36 hours ago. Certainly looks like that rates will be cut in the US again. The US inflation, or consumer price index, rose by 0.3% in November, 2.7% for the year. Markets have now priced in a 95% chance of a 25 basis point cut when the Fed meets next week. Now, the Bank of Canada and European central banks, they've all cut rates over the past 48 hours or so. Australia's just looking a little lonely at the moment. I mean, we've still got the Bank of Japan, I suppose. They're our friends. They're actually lifting rates, or almost lifting rates. And otherwise, everyone else seems to be cutting them. The inflation figures in the US helped Wall Street, with the tech-heavy NASDAQ pushing beyond 20,000 points for the first time ever. The NASDAQ has almost doubled in the past 2 years as the Magnificent Seven tech stocks, Apple, Nvidia, Microsoft, Alphabet, Amazon, Tesla, and Meta, have pushed Wall Street higher and higher. The single biggest question for investors on Wall Street in 2025 is whether the Magnificent Seven can keep running.
Well, Tesla certainly seems to keep running, doesn't it? Or perhaps it should be driving. No, You know what? Stick with running, because driving is just it's just lazy. That was a terribly lazy pun.
Yeah, no, definitely running. Tesla was a big mover yesterday morning, jumping 6%. It's now valued at $1.3 trillion US. It's doubled in value since August. if you can believe that. Yesterday, it passed its previous all-time high of August 2021. It's mostly about Elon Musk's relationship with Donald Trump and hopes that Tesla will benefit from the new administration. The jump in Tesla's share price means Elon Musk is now worth about $400 billion US dollars, according to the Bloomberg Billionaires Index. Now, a lot of that is Tesla, but also this week we got an increase in the valuation of SpaceX. That boosted his wealth by about $50 billion. Then we had Tesla on top of that. It is phenomenal. Back to Tesla, 1.3 trillion US dollars. For comparison's sake, Toyota, 280 billion. So 1.3 trillion, Toyota, 280 billion, General Motors, 57 billion, Ford, 41 billion.
So hang on, Elon Musk's own wealth is greater than Toyota, GM and Ford combined.
Yes, yes. Great stat.
That's extraordinary. And just a quick mention, Sean, Bitcoin also pushed back above $100,000 a unit.
Yes, the inflation news certainly helped, and the crypto is again trading near a record level. All things being equal, lower rates in the US should help the Aussie dollar, but there wasn't much support for it yesterday morning. It hit a 12-month low of 63.34 US cents after those US inflation figures. Then came the local jobs figures, and it rose back above 64 US cents. Meanwhile, gold is trading above 2,700 US dollars an ounce. Brent crude is rising about 74 US dollars a barrel. Iron ore prices are down back towards 100 US dollars a tonne.
After the show today, Sean, you've got an interview coming up with Alison George, the head of impact and ethics at Australian Ethical. This is a very timely conversation that you're having with Alison.
It is, because they're putting Australian Ethical, the big super fund, is putting pressure on the banks to do a better job when it comes to explaining what they're doing in that ESG space. Now, Westpac has its AGM today. National Australia Bank has its AGM next week. Australian Ethical is putting pressure on those banks, but particularly Westpac, to do better in explaining what they're doing around ESG. So we go into that with Alison. It's a fascinating chat.
Yeah, it sure is. It's a great one. Stick around for that. It's coming up after the show. In the meantime, Sean, we've got plenty more to cover. We're talking that huge news for social media companies in Australia. We've got Virgin Australia selling long-haul flights and private equity getting into the NFL. So much still to come. We'll be back in a moment with the rest of the day's business news. Sean, the Albanese government is planning to force social media companies to pay for journalism on their sites via a new scheme that'll impose financial penalties on the companies if they don't contribute to local news.
Under the proposed laws, the Australian Tax Office would impose an annual charge on social media and search companies worth more than the value of deals struck under the existing News Media Bargaining Code. That's about $200 million a year. Platforms that do deals to pay news publishers would then be able to offset the value of those deals against this new ATO levy. Labor will call it a charge. There'll also be an uplift factor every year. This is an ongoing issue with the likes of Facebook and Instagram, X, Google, TikTok, whether or not they should pay for content. There has been a news media bargaining code in place when it came up for renewal for Meta, which of course looks after Facebook, Insta, Threads and WhatsApp. It just simply refused to renegotiate payments to media outlets. The social media groups have been paying the publishers about $200 million annually. And since Meta pulled out, there's actually been redundancies in legacy media organisations. Under this new policy called the News Bargaining Incentive, any platform that refuses to negotiate with publishers or removes its news from its platforms, and Meta did that in Canada, for example, well, it would still be hit with this ATO levy. So they could be paying hundreds of millions of dollars for nothing. It is a very, very aggressive move by the Albanese government.
It certainly is. They are not holding back on this one. Speaking of politics, childcare, Sean, is set to be front and centre in the upcoming federal election campaign after the coalition said it won't support government plans to change the rules around accessing financial support.
So earlier in the week, Prime Minister Anthony Albanese talked about what's known as the activity test for childcare payments. He said they would remove that. The test requires parents to have a job, be looking for work, studying, before they can receive subsidies for childcare payments. Always been a thorny issue. The Prime Minister also announced a $1 billion fund, an early education fund, to help build or expand 160 childcare facilities in what they call childcare deserts, places where there's high demand and few facilities. The opposition yesterday said it wouldn't support the changes, notwithstanding many in the business community, including the Business Council of Australia, actually do support these changes. The government's also considering a scheme where families would pay a flat fee of $10 or $20 a day for childcare with no activity test. Clearly, this is going to be a very big election issue, which has to be held by the middle of May next year.
I mentioned Virgin Australia a couple of times now, actually, Sean. It's begun selling long-haul flights as part of its deal with Qatar Airlines, injecting a healthy amount of competition, one would say, into international airfares.
Yes, we're not here to promote Virgin Australia, of course, but, single but, suddenly their long-haul flights are on sale. There is more competition. That's a good thing. Yeah. Economy class sale fares from Sydney, Brisbane and Perth via Doha to a bunch of European destinations are now available. Melbourne is coming soon. Prices to places like Paris, London, Rome return under $2,000. Very exciting. Business class seats are also on sale. There was a bit of a hiccup yesterday. They didn't go on sale initially because of some technical issue, but apparently they're on sale. Virgin CEO Jane Herdlicker said the partnership also brings benefits to exporters because it helps them get their goods into the Middle East via Virgin Australia. Agricultural businesses in particular should benefit. As I said, we're not promoting Virgin, but more competition in long-haul flights is a good thing, I reckon.
Yeah, overall for the entire sector. It does always worry me, though, Sean, whenever you start talking about international travel and you start covering stories about airfares and all of these things, and typically you trace it back, and this has happened a couple of times now, these stories start popping up, and about a week later you say, oh, by the way, I'm going to insert kind of European country here. And all of a sudden you've been inspired to disappear for a week or 2 weeks or 3 weeks.
That is a lie because a genuine lie because it's not just European countries.
It's also the US, it's Asia.
US
basically, too. And you are a truly global traveller, Sean. So stand by for the announcement in coming weeks of where you're going next, I'm sure. Now, the share price of infrastructure services provider Ventia tumbled yesterday on news that the Australian Competition and Consumer Commission has started proceedings against it and Spotless for alleged historical price fixing.
Spotless is nowadays owned by Downer EDI. So Ventia and Downer EDI are caught up in this. Their share prices fell yesterday. The case relates to a multi-billion-dollar contract with the Federal Defence Department to provide maintenance and operational services to 200 bases around the country. Spotless currently has a $4 billion contract with Defence. Ventia has a $5.8 billion contract. The contracts are due to expire mid-next year, according to a report in the AFR. Now, the ACCC alleges that executives from the two companies made or tried to make arrangements to fix the prices at which Spotless, Ventia and a third group, Canadian crowd called BGIS, supplied services to Defence between April 2019 and August 2022. ACCC chairwoman Gina Cass-Gottlieb said the alleged conduct caused direct harm to taxpayers. Downer has denied the allegations. Ventia said it's reviewing the details before commenting.
How about this one, Sean? Another Australian company has been caught up in the civil unrest in Mozambique. Sierra Resources has declared a force majeure event at its graphite mine in the country.
Force majeure, by definition, is, well, I don't know what it is. Is it an act of God, isn't it? That's what force majeure?
So. Yeah,
an act of God.
You always see it pop up in contracts.
Yeah. I mean, it's kind of the idea of something happening that's totally unforeseeable, an act of God. Now, in business, force majeure clauses in contracts means that a company isn't liable for unforeseeable or, unavoidable catastrophes, basically. That's what Sierra Resources has said. The unrest in Mozambique has been going on since its election in late October. More than 100 people have been killed. On Wednesday, South32 said it was worried about its supply chain at its aluminium plant in that country. Now Sierra Resources has been caught up. The group said the unrest is hindering its ability to conduct operations, hence force majeure.
Okay, turning to international news now, the UN General Assembly has overwhelmingly approved resolutions demanding an immediate ceasefire in Gaza and backing the UN Agency for Palestinian Refugees, which Israel wants banned.
There were 158 votes in favour of both motions, including Australia's votes. Israel and the US were in the small minority, speaking and voting against the resolutions. General Assembly resolutions aren't legally binding, but basically they reflect world opinion. There's no vetoes, for example, in the General Assembly. Now, the vote occurred after the US vetoed a Security Council resolution last month demanding an immediate Gaza ceasefire. The real significance, well, it is very significant because of what's going on. The significance in Australia specifically is the fact that we have opted to vote against Israel in this instance. Previously, generally we've abstained or we've followed the US lead. We're not doing that anymore.
Finally, Sean, I know this is a story that you will be fascinated by because you seem to have a genuine kind of excitement for US sports, but also where business and US sports collide. And this is a perfect example of that. Private equity companies are buying into US NFL teams for the first time after rule changes allowed these financial giants to invest in ownership of franchises.
So ownership of NFL teams in the US has been a closed shop. Only uber-rich individuals allowed in. Now, having said that, to actually buy... So the Chicago Bears has been owned by the same family since 1920.
Oh, wow.
Yeah, phenomenal. And the NFL is a very closed shop, very different from the EPL, the English Premier League, for example. In August this year, the owners of the NFL teams agreed to let investors in, private equity, for example. Now, Ares Management acquired a 10% stake in the Miami Dolphins franchise, buying it from a real estate mogul, Stephen Ross. The FT is reporting that the stake is costing around $800 million, which obviously values the Miami Dolphins at about $8 billion. Ares will also get stakes in the Dolphins Hard Rock Stadium in Miami and the Formula One Miami GP. It already has stakes in the European football teams and the McLaren F1 racing team. So a big investor in sport. The other deal, Arctos has acquired a minority stake in the Buffalo Bills, another NFL team. It already has stakes in baseball teams, the LA Dodgers, the San Francisco Giants. It's involved in the basketball franchise, the Utah Jazz. It also has stakes in Paris Saint-Germain, the football team, and the Aston Martin F1 team. It's just really interesting that the big PE guys are now pushing in to American sport. And NFL is easily the most valuable franchises in the world, well in front of EPL, like the English Premier League or La Liga, or in front of baseball and basketball in the US. And it's being opened up to them. So I would imagine demand will be strong, so they could get even more valuable.
So I told you were fascinated by these stories.
Yeah, American sport is, the actual sport part is much better. Like college sport is more fun than professional sport, but the business of professional sport is amazing.
I reckon I could have just said NFL to you, just those three letters, and then just turn off my mic and walk home. Yeah. And you would have just been talking for the next 3 hours.
I reckon I'm going to bags that for the weekend edition, that one.
Of course you will. Yeah, that'll be your favourite story or the most remarkable story or one of those ones tomorrow in the weekend edition. Don't miss that one. Up next is the Fear and Greed Daily interview. Alison George, Head of Impact and Ethics at Australian Ethical, is your guest. And at midday today, Sean, Ask Fear and Greed is coming up, which is where we answer listener questions. If you've got your own questions, send it on through to us via our website or one of our social media platforms. Today's question is a good one because it's all about productivity. And
yeah, now you're laughing at me because I kind of get a bit excited. I mean, it's an economic concept and my background is in economics. And so I start talking about how it's measured and, about 3 or 4 minutes into it, just stay with me if you're listening to it. Michael goes, Sean, really dull so far, pick it up. That's basically how it goes.
Yep. And you finished with a lot of pep and I enjoyed
that. Good.
So,
Good.
So check out that one at midday. Thank you very much, Sean.
Thanks, Michael.
It's Friday, the 13th of December, 2024. Make sure you're following the podcast and please join us online on LinkedIn, Instagram, X, TikTok and Facebook. I'm Michael Thompson and that was Fear and Greed. Have a great day.